Have you ever looked at the absolute chaos of market data and wondered how in the world financial pros pull a clear, actionable story out of it all? Well, here's a secret. They don't have a crystal ball. What they do have is a blueprint. And in this explainer, we're going to pull back the curtain and deconstruct that very blueprint, showing you exactly how they turn all that noise into a clear signal. Okay, so let's jump right in. Every single morning starts with a dashboard that looks something like this. You've got oil hovering over $100, Bitcoin is right there, knocking on the door of its all-time high, the US dollar index, the DXY, is looking really strong, and bond yields are climbing. Oh, and to make things interesting, the main US stock market is closed for a holiday. At first glance, it just looks like a total jumble of numbers, right? So where do you even start?
Well, believe it or not, it's not random at all. There's a hidden structure, a method to this madness that they use to connect all of these dots into one coherent story. And today we're basically going to hand you a copy of that blueprint. Let's walk through it step by step.
All right, first things first. Part 1, the rapid-fire market snapshot. You see, a professional brief doesn't waste any time. It hits the ground running to tell you what matters, right now.
No, the technique here is what's so cool. It's this high-energy volley of information. It's like, bam, oil above $100. Bam, Bitcoin near 69K. Bam, DXY is firm at 100. Each one is a different piece of the puzzle, but they come together to build this single, cohesive snapshot that leads to the day's main theme: U.S. markets are closed, so crypto leads today. In literally less than 10 seconds, the entire stage is set for the day. So once that hook is in, the next move is absolutely critical. And that brings us to part 2, setting the daily regime. This is where the real analysis begins to take shape. Before they even think about a single asset, the pros give a name to the overall environment. In this case, they're calling it an inflation-sensitive growth regime. Now that sounds technical, but the idea is actually pretty simple. The economy is growing, yeah, but it's constantly looking over its shoulder because of high inflation. Think of it like you're driving a really fast car, but you've got the handbrake pulled up just a little bit. From this point on, every single piece of data gets viewed through this specific lens. And look, this regime isn't just a wild guess. It's a conclusion that's built on hard evidence from that morning dashboard. Oil over $100, that's inflationary. High bond yields, that reflects the inflation fears. A strong dollar, that signals tighter financial conditions. And since the main US markets are closed, the 24/7 markets, like crypto and foreign exchange, they become the only places where all this pressure is being worked out in real time. So, now that we've established the regime, the deeper analysis can finally begin. Welcome to Part 3, Decoding Key Asset Signals. This is where you see that no single number lives in a vacuum. It's a clue in a much larger mystery. First up, the asset that is really the center of gravity for this regime: oil. The headline number that everyone is glued to is $103 for West Texas Intermediate crude. But a professional doesn't just see a price. They see what that price means. Oil holding strong at this level isn't just some temporary blip because of the holiday. No, it's a powerful signal of persistent structural inflation that's getting baked into the cost of everything. Okay, now let's pivot to another classic indicator: gold. It's trading at an elevated $4,657.
You might see a high gold price and your first thought is, oh no, panic. But the pros see the nuance here. Because other riskier assets are still holding up okay, this isn't a mad dash for the exits. What it really points to is strategic hedging. Investors are just buying a little insurance, which is a classic pattern you see in a late cycle market, where growth is still there, but people are getting a little nervous about what's around the corner.
And that brings us to the modern market's barometer, Bitcoin, trading strong right near that huge psychological level of $69,000. So here's the crucial point. It's all about context. On a day when Wall Street is completely dark, Bitcoin's role fundamentally changes. It becomes the most visible 24/7 gauge of what global risk appetite looks like. Its price action gives everyone an early peek at how traders might be feeling when that opening bell finally rings. All right, so we've decoded the individual signals. But the real genius of a professional brief is how it weaves them all together. This is the intellectual core of the whole thing. Part 4, connecting the macro dots. This is what they call the macro transmission chain. It's basically the cause and effect story of the market. It all starts here with high oil prices. That, in turn, raises everyone's expectations for inflation. What does that do? It pushes bond yields higher. Higher yields make the US dollar more attractive, which strengthens it. And then finally, that powerful combo of high yields and a strong dollar puts pressure on riskier assets, like stocks. See? It's a clear, logical chain reaction. Okay, so we get what's happening now, but markets are all about what's happening next. That brings us to part 5, framing scenarios and levels. This is where the analysis becomes a real forward-looking tool. Now, notice this approach completely avoids making one single rigid prediction. Instead, the analysis maps out 4 distinct possibilities. You've got everything from a stable market to one where inflation gets stronger to a full-on risk-off panic and even a low-probability tail risk event. And each one of these scenarios is tied to a specific driver, giving you a clear roadmap of what could happen next. And this is what makes the whole thing incredibly practical. These aren't just abstract ideas. They're tied to specific, actionable price levels. You should think of these as tripwires. If oil breaks above 110, or if Bitcoin drops below 67,000, that's a huge signal that the market might be shifting from one of our scenarios to another. This is exactly what traders will have on their screens all week. So we've gone all the way from a flood of raw data to this sophisticated, forward-looking framework. But for any of this to be truly effective, all that complexity has to be boiled down into one core idea. And that is the final step, part 6, the final macro takeaway.
After all of that analysis, the entire brief lands on this single, powerful insight. On days when the traditional markets are closed, the 24/7 assets, they aren't just some sideshow. No, they are the main event. They literally become the real-time engines of sentiment, giving everybody a preview of the market's next move.
And that's the whole point of this blueprint. It's a system, a way to translate the confusing, chaotic language of the market into a clear and compelling story. It gives you the power to look at that initial dashboard of numbers and find the narrative that's hiding inside, which really leaves us with the one question this framework helps you answer every single day. What story is the market telling you today?